Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everyone, welcome back. Good morning. Thanks for being here. And hope you're hanging out or hanging in there with the craziness that is this market. We can see that overnight we got a shoot lower in indices, a move higher in gold. Gold is back to those all-time highs here in a hurry. You have oil prices up at one point, up 10% on the day, I believe. I believe that's right. Yeah, I mean, we were up 10+% on the day, just briefly here. In the overnight hours, Asian session, of course, we saw, unfortunately, some violence in the Middle East, and we do see oil prices in response to that making a move higher and risk assets being sold. Bitcoin moving lower, of course, the NASDAQ moving lower, the Dow Jones, the S&P 500, the DAX, the Russell, Asian markets moving lower as well. So we did get a negative response and a spike in the VIX here. However, we are seeing in some ways some of that volatility get muted here this morning. We saw something somewhat similar, or at least some flare up in the Middle East. I believe it was October of last year or so. We had a flare up in the Middle East, and it was sort of short-lived. So I think the market is rapidly trying to figure out if it is a similar dynamic where we're going to get a spike in volatility followed by, from there, it doesn't escalate further. Because now you have to ask yourself, if you're somebody who's like, oh, oil's going to skyrocket, gold's going to skyrocket off of this specific event, right? If you are thinking that, then what you're betting on essentially is, okay, the market just figured out, oh, we had this big attack, right? This big escalation in violence. Is it going to escalate further from there, which would send oil, the VIX, gold higher, the dollar higher, by the way, which is behaving interestingly in response to this as well. And then at the same time would send indices lower. Like if you think that there is further escalation, like Iran's going to respond with violence, or Israel is not done with what they started here, right? So if there is further escalation, then it is likely that oil prices would advance higher. And if there's diminishing escalation, or things, cool off a little bit, we may have seen kind of a big spike and fake out in oil, as we have seen many times with these geopolitical events. What I would say kind of happens on these geopolitical moments where you get these scares is, now that everybody's expecting something next, the market runs it up, and then oftentimes it actually is a short-term top, right? Because you get this big fear. Oh my gosh, everybody's looking at it, the Middle East, saying what's going to happen next. And most of the time, at least in my experience watching this stuff, with Russia, Ukraine, the Middle East, what typically happens is you get the big flare up, and then everyone's watching it and expecting something, way worse to happen, and something way worse does not happen. And so the market goes back down. It's weird, but that is the tendency that I've seen in markets in terms of geopolitical events. However, let me preface that with, that's most of the time what I've observed happen. But in the instances where it is a real start to something much bigger, then you are looking at just the beginning of a move. So I think it's unlikely, but if this is just the beginning of something bigger, then you're talking about massive upside, right? And that's why oil prices will spike so aggressively, is because many people are like, oh, if this is the thing, if this is real, oil's going to 100, right? So, from a humanitarian standpoint, let's hope that this de-escalates as quickly as possible. What's sort of weird about this is that I had a bullish perspective on oil anyways, but it was not for this. I did not try and call this, and I missed my entry narrowly. I actually put in our Discord group that I was looking at an entry at 64 on WTI after we broke out of this resistance and downtrend that we were in. Oil looks really strong right now. And I don't just say that just because we had a geopolitical flare up. I was looking at oil. If you've been watching the stream, then you know this. I've been looking for oil longs, and I'm a little bit kicking myself that I didn't get into this trade. Now, I wouldn't have done it any differently. I had my levels set, and I just didn't get my entry. But that happens, right? So that would have been the picture perfect trade to, of course, be hedged on this kind of geopolitical conflict that we just saw kind of flare up again. But my perspective on this is that I think the move is probably done for now. I mean, it could, of course, right? We could, of course, see this thing further escalate. Fingers crossed that it does not, because of the humanitarian side. But in terms of just a market perspective, I think most likely you're going to get a pullback in oil prices just when everybody thinks, oh, it's going to go, moonshot to the upside. I do like oil prices on the long side, but not necessarily from a supply shock due to geopolitical events perspective, but rather from just a demand side. I've talked about this a lot on the videos here recently. The U.S. economy has been, holding up decently well. We have what I think is the recipe for rate cuts this year. And I also think that the expectation of that, everybody's going to fall in line and we're going to have peace on earth in all ways. I don't know that is clearly not, happening today, but also not something that I think, unfortunately, is coming anytime soon. We just have so many conflicts and such strong viewpoints and opposite viewpoints on many subjects globally. I don't see, unfortunately, like I said, just a super peaceful environment. While Trump may be a good negotiator and make some deals happen, potentially, let's hope he does from just a peace perspective. I think that these things are bigger than just the current administration's ability to negotiate them, right? India, Pakistan, Israel, Iran, Russia, Ukraine, these things are deeply rooted conflicts that are going to be very difficult to resolve, unfortunately. And hopefully all we can do is, bystanders watching this, is hopefully that they are resolved peacefully. Why can't people live in peace? They're, like I said, these are deep issues that are very, very complicated. And I definitely do not claim I don't have the answers. As a market participant, I simply am watching how these things impact and trying to understand them the best I can within the framework of my trading approach. And that is all I'm here to do on YouTube. So, it's one of those things. You have oil prices shooting higher, gold prices back to the highs, 34, 35. Again, we haven't seen gold back at these levels since, what was this, late May or early May? Sorry. So we had the April flare up, of course, with the trade war stuff, and then we bounced back up once more, and then came back down and have really been sideways on gold for a little bit. Now we're testing those all-time highs once more. And I do think that we have the double whammy. So I think, we had cooling inflation this week that suggests that the Fed likely can cut rates. I just want to do something that is bothering me that I need to do. So I don't like that by default this chart goes out 3 years. So I'm going to just change this while I'm thinking about it on stream. So if we were to refresh this page, when we now pull up inflation, if you have the Edge Finder and you want to look at further back inflation, by all means, you can adjust it here. But I think by default, having a little bit more of a zoomed in chart is more relevant to today's market analysis. So I just changed the default selection period to 1 year back on inflation. So with that said, right, inflation where are we at with inflation? Well, 1, 2, 3, 4 inflation periods, 4 months in a row, we have seen consistent inflation under expectations. We also have seen some evidence of a labor market that is kind of cooling off, right? And you don't want to break the labor market. You don't want to see unemployment claims continue to rise, right? We've seen rising unemployment claims here. We've put in a fresh multi-month high in terms of unemployment claims here on the weekly claims. Yesterday, we had a new high on this, 248,000 unemployment claims. So the way I see things right now is I think rate cuts are very much, I think the Fed should be cutting interest rates pretty soon. We also have job openings have been, materially weakening here for several months. So we see job openings deteriorating. We see, and they're not in like critical levels. So don't get me wrong. I'm not saying it's an urgency or an emergency to cut interest rates. But I think it would be, June or July rate cuts would be appropriate. But it seems like the Fed is more poised to cut interest rates in September. I think the bond market now thinks that the bond or the rates are going to get cut by 25 basis points on 2 occasions this year. That's the new baseline, which has been what we've been saying on the stream. So we've moved in the direction of what we've been talking about at the beginning. There was like expectations for 1 or 0 rate cuts this year. I think it was like 1 was the consensus, and now we've seen consensus kind of solidly come into 2 rate cuts this year, which I think is more appropriate. So the Fed is working towards rate cuts, I think. With some of this data, we have 4.2% unemployment rate. This is not a critical level of unemployment, but ADP missed expectations. NFP beat, but I've talked about this a lot on the channel. We narrowly beat on NFP, and we revised numbers lower for the previous. So to me, it's like, okay, labor data it's not like it's crashing, but it is definitely not super hot, right? So when we look at the economic data, we say, okay, inflation's cooling, labor statistics are cooling. The Fed's sitting at 4.5% interest rates, and we have inflation at 2.4, right? If the Fed's interest rate, borrowing costs are 4.5, this number is much bigger than this number. So that's why a lot of people are saying interest rates are pretty restrictive right now, where they don't have to be. So I think it's appropriate that we do cut interest rates, and I think that continues to be a bolster to the price of gold, right? We've seen gold rising in the last few years off of cooling inflation and off of expected interest rate cuts, not just in the United States but globally. So to me, I look at gold and I say, okay, yeah, that's a tailwind for gold, as it has been for some time. I think rate cuts are back on the menu, and I think that these highs can be broken, especially with a trigger like this, with the geopolitical conflict that's going on. Breakouts, retests to me look attractive for more upside on gold prices at this time. So we'll have to see what comes next with all of that. But to me right now, like I said, I think gold continues to have upside, at least in the here and now. We'll see if something changes. Dollar index did bounce back in response to this. Let's talk dollar for just a moment. So geopolitically, we did get a bounce back in the US dollar. Do I think that this is a huge, big time reversal coming back in for the US dollar? I don't currently see that. Could we, maybe see a little bit of a fake out here through the lows? I saw Alan discussing that. I think that's possible, that we, everybody kind of, it's going down, and then now we're getting the bounce back. But of course, I think that even though you're getting the geopolitical, people rushing into the dollar for safe haven status kind of thing, I still think that the predominant trend for the dollar, off of cooling inflation data, off of cooling economic data, rate cuts, I think that the path of least resistance for the dollar is still lower, which is, like I said, part of the reason why I like gold to the upside. Silver also, jumping up here, holding up pretty strong, even though it's not up as nearly as much as gold here today. Oil prices, I discussed these briefly at the top of the stream. So for me personally on this, I wanted to be a buyer of oil at 64. on a pullback, missed my entry, and it rocketed off without me. Such is trading. It happens to all of us. For me personally on this move, I'd be interested, but gonna just have to say I'm gonna be patient on a 64 retest. If it happens, it might not. You might get oil prices, going to 100 in the next several months. Could happen. I'm not going to chase this move. So what I'd be looking for would be at the very minimum, I would need to see that retracement into the 61.8% retracement. And if I'm not in the trade, I'm not in the trade. If it leaves the station without me, so be it. But this is the trade that I've got to wait for. And so that's what I'm going to do. Let's take a look at some currencies here in response to this. By the way, if you're enjoying the stream, do me a big favor, hit the thumbs up button and subscribe if you're new. Also, we've got a long stream here ahead of us. So if you guys have some questions that you would like to ask me, here's a quick way that you can do that. So I know people have had questions in the live stream chat, but I have a list of things that I'd like to get through here before I can answer questions. So if you have a question and you are patient to wait for it, I appreciate your patience. Take a second to fill out your question right here using this form link. If you use that, I'll be doing questions towards the end of the stream, and that makes sure that your question gets saved and doesn't get lost in the chat. So there you go. I'll get to those once I get done kind of presenting through all of the charts that we need to discuss here today. Today, we've I got to say, I feel like we've leveled up on the stream presentation style here. I like being able to kind of get through the important highlights of the day in one pace. And let me know, guys, tell me if you feel the same way. But I think I like the model, the live stream model, where we go through charts and analysis first, and I kind of continuously run through all the charts, and then we do questions. I feel like that's a better model than doing charts and interacting with the chat and stopping and going back and forth over and over. Can you guys help me out with this? I just want to get a pulse check on you guys who are, if you care about the stream, if you're here all the time, here's your chance to give me some feedback on this. I'm just curious. Type 1 in the chat if you prefer the present everything first, then do questions. Type 1. If you are somebody who prefers chart, chat, which does slow me down, but does make it so that I'm kind of interacting with questions, type 2. I'm curious what model you guys like more. I'm going to just say my personal opinion. I much prefer doing 1 because it's very difficult. If you've ever done this before, then you know what I'm talking about. It's very difficult to do charts and then also look at the chat, read the chat, go through the chat, come back to charts, right? It's very difficult because then what happens is I get stuck looking at the chat for like 5-8 minutes before I get to another chart. So this allows, from a time respect for people who have, busy schedules, who would just like to listen to stuff, gives me the chance to just go through a bunch of charts and knock them out. So cool. I know I'm not the best at juggling chat, but chat with charts, but from my perspective, I have a lot of data to spill to you guys and to charts to go through. So I think that this model is functional. So I apologize if you're like, I have a burning question and you're not seeing the chat. I'm just trying not to, derail the stream and stay on focus. Anyways, let's keep going. So getting into currencies, thank you for we had a lot of 1s. So 1's going to stick then. I'm glad to hear that. Okay. So, Euro broke through the highs, bit of an inverse to the dollar index. We broke through the highs, came back into this. This is not one for me at this time. I would have liked if we had seen a couple days kind of securely staying above this level of resistance. I'd be buying this pullback, I think. But I'd like to have seen a little bit more of a confident close above those highs. We're just narrowly closing above this previous high on the euro. So, and this is after a really big run. So for me on the euro, I would like to see a little bit of a squeeze higher and then a pullback before getting involved. Pound dollar might be one to look at. So I am bullish on these things. Let me just see edge finder scoring wise. What do we have here? Euro dollar is getting a bullish rating. Pound dollar is, where's pound on this? Did I miss pound? Let me just do currencies here. Euro dollar, pound dollar is getting a neutral reading. Oh, it's the COT data. COT data showed a little bit of selling of pound, which is interesting. So we'll keep an eye on that for maybe next week. By the way, COT data drops today, so this could change. So I'll keep an eye on this over the weekend. Depending on how the commitment of traders data, that could impact the scoring, and of course, potentially could trigger a trade for me. So stay tuned on that. By the way, as I go through this, if you guys want to try out the software that I'm using, we'll drop a link in the chat to where you can sign up for a trial for 30 days and get some information about how that function works. Nick, you need a simple web pool app for this kind of chat interactions. People can go to that link and give their vote. But we did used to have like a voting system that I built. It was a software tool that we could vote on things on the stream. I'd have to dust the cobwebs off on that one. Anyways, yeah. So if you have an interest in trying out our software, I think it's the best in the business. I'm a little bit biased, but I think it is. Check it out. Link is in the chat right now to try out the Edge Finder 30 days. Okay, so back to the charts here. Euro dollar is an interesting one for me. I would actually be interested in this if you gave me a little bit more of a pullback. So we had this swing low to swing high. I might be more intrigued actually in picking it up here around this 38.2% retracement. You've had the attempt through those highs. If we get a couple days down here, 38.2 might be a spot where I look to start maybe building a position on the euro. So I'll keep an eye on that one. Like I said, COT data comes out this evening. I'll keep an eye on that on the Edge Finder. Pound dollar here down a little bit. Would be interested to at least see what that COT data report shows. Around that 134.25 looks kind of interesting. Dollar yen. I had a long trade on this one. I'm out of it, and I'm kind of glad to be. This thing has just been choppy as anything recently. Dollar Swiss franc looks bearish here, sitting at support. Let's see what happens. If you can, get a big break through those lows, dollar Swiss might be a candidate for some more downside. Dollar CAD also looks very, very strong to the downside. Although look at how weird this chart is. This chart is very strange, where it's like contracting, right? You have this really tightening price action where you had the big moves over here. Volatility has really, really come down in the dollar against the Canadian dollar. So I'd like to see, personally, if I'm looking at this thing for possible short trades, I would love to see this thing kind of come back into. I'm going to update our chart here a little bit. Let's just clean it up. Something like a pullback into these levels. If I get my fibs, this would put us at where? So you have this really long-term level of support where we currently are sitting. Let's still tighten this up just a bit. So we're sitting at a support level for dollar CAD. We'll see if we do get a bounce back. But for me personally on this one, I would be interested if we got somewhere in this 38.2% retracement. We have this big kind of reversal here, big support that we broke off of, came back into. Yeah, dollar CAD. It's not the prettiest chart, but it is one that I'm watching. And I believe that if we take a look at our currency heat map for just a second, our economic surprise meter, I believe Canada's been getting some strong. Yeah, look at this. CAD is coming in with an 83% score. It's pretty strong for the Canadian dollar. And there's our US dollar getting a 50-50. So economic data for the US kind of coming in mixed, right? And then Canadian dollar coming in strong. So NZD, Canadian dollar, British pound, those are kind of my top three right now for bullishness. And then in terms of bearishness, what I find interesting is you really only have the Swiss franc in terms of straight up bearish category. So I'm long CAD Swiss, and I still like the trade quite a bit because of this dynamic. So I have a CAD Swiss trade that I've talked about on stream. I have it in my Oanda account, and I also have it in another brokerage. So I'm long on CAD Swiss in a couple different accounts, and this thing is just so choppy here. But I'm fine with it because I've got like two entries. One is like break even, and one is sitting in drawdown. But both of them are collecting positive swaps. And even though we've gone sideways for like 2 months, this thing has been. I've been collecting positive swaps. I'm positioning, and I do think that this has upside. Now, chart does not look good. It's not a pretty chart. It's not a great uptrending chart that I'm buying into. We are sitting, I think these are near all-time lows, which is a weird thing to be buying into. But I like the fundamentals, and this is very much when I trade Forex, it's very much fundamental, and I think that the potential edge in Forex is very different than it is in, you know, stocks and options and gold and oil. The edge that I have in those things is different than how I trade Forex. In Forex, I'm looking at long-term interest rate differentials. I'm looking at the strength of a currency's economic data versus its peers. And so, when I look at CAD Swiss, I'll let this thing sit in my account for 6 months if I have to. I'm not worried about it at all. It's a really small position. If it wants to just chop sideways, I'll collect positive swaps. And yeah. Antique Nico, the software that you're looking at here is the Edge Finder. It is my child. I have dedicated probably probably the same amount of time, I imagine, as what a loving parent would invest into their child. That is the overly dramatized version. But anyways, Edgefinder is my child. I've been working on this thing for the last several years. It is a tool that helps traders scan economic data. And let's just play a random game. What do you guys think? Like, this is a weird conversation. I'm just curious what you guys say. What do you guys think? How much money do you think has been invested in building the Edge Finder? Like, what? Somebody give me your number. I'm just curious what you guys would say to this. I don't have the exact number in front of me, but I just want to see, if you had to guess, building a tool like this, what do you think it would cost to build? We have data for the UK, Europe, the US, seasonality metrics. And I am factoring in not just the development of the tool, but the development of education surrounding the tool. We've built coursework. We've got a support team. We've got many videos that we've contracted people to do for it. Advertising, marketing. I'm just curious what you guys think. Okay, so we got some interesting numbers. 10K. 10K. You ready? Here's your hint. 10K pays for this square right here. You see this square? That's 10K. I'm just kidding. That's definitely dramatic. But 125, 125, 15, 20, 120, 30, 500, 100, 15 to 50, 300K, 60K, 15. All of these are incredibly low. Like Bulent with 2 million. But that's the thing. Like, numbers are weird when you're like talking about like an enterprise or like a company spending. It's very, very high. If anybody's worked in like, Fortune 500 company and seen like the kinds of numbers that like a Costco, the numbers that if you worked at anything finance side at Costco, your idea of numbers would be blown. Like, the amount of money companies spend to operate is insane, right? We have an office, we have a team of people, content creators, affiliates, marketers, support staff. I don't have the exact number in front of me, but it is easily over $1 million. Easily. Like, probably closer to 2. It's a huge investment. Now, of course, granted, we sell a lot of copies to help support the efforts, but it is a massive investment to build these sorts of things. The reason I say that is because sometimes we get people who say, you can just do this for free. And I'm like, dude, go for it. But the talent that you need to have in order, and it's not just me, like I have a development side of things, myself and a developer that work constantly on it. So yeah, no, it's very expensive, but it's a passion project. I'm not like losing money on it. Like, we're making money on the Edge Finder, don't get me wrong, but I'm just, I'm always curious to see what people say. They do say it costs over $1 million to raise a child. I'm scared to hear that, Alan, but yes, I mean, it's just weird because numbers are a strange thing, but in order to do $1 million in sales on a product, it very much in many businesses that might cost you $800,000, $900,000 to produce $1 million in revenue. So yeah. Anyways, I mean, and that doesn't even include, we also have the stock box, which we're constantly developing and working on. So it's fun. I love that stuff though. We're, constantly reinvesting in building the tool into being the best tool that it can possibly be. That is the ultimate goal with what we do at A1, is we want to build some of the best stuff for the average trader. But that's where, you hear like the Bloomberg terminal costs like $20,000 a year or something like that. I know that number is insane, but they're selling it to hedge funds, they're selling it to big businesses. And the Bloomberg terminal, their yearly running the Bloomberg terminal is probably like $100 million, probably something insane, right? It's like 270 million V-Bucks. Yeah. Somebody put it in V-Buck terms so I can understand it. How does the Edge Finder gather its data? Just walls of code, APIs. Just if you were to look under the hood would smack you on the head. It does every time I look at it. Anyways, I asked you guys to share some questions. If you have a question and you would like to drop it in the stream, drop it in the chat. We'll in the chat, we'll drop a link here. If you have a question for the stream, I'm going to take a few moments to do so, to answer some questions. Let me just see. Let me check, make sure everything looks clean. Looks clean. Okay. So we're going to do some live stream questions. I went through most of my charts here for today. Another thing that's on my to-do list is for you guys who are guest hosts, like I think James and Alan and everybody who's in here. Yeah, Central Bank of James, good to see you guys. Nick, we should do a business podcast or video. I would love that, man. Just came to say hi, got to run. Yeah, see you, James. Thanks for stopping by. So let's just do some quick questions. I got to make it so that other hosts on the show can also do this with questions. I think it's a great way to, just see what people have to say in the chat. Anyways, let's jump into some questions. First question is from Raz, traded 1 to 3 years now. Primary goal right now is, they say this, to learn more about fundamental analysis. They don't have our products, but they're interested. Hey, Nick, do you think Apple is in a path of Nokia? That's an interesting question. Sounds like you might have been watching my stock videos. And if you didn't, you should check them out. If you like stocks, search up Trader Nick Stocks on YouTube. I just launched a YouTube channel on stocks, and it's a very humbling experience to start over on YouTube, but it also is an incredibly fun process. I'm having a lot of fun with it, making new videos. And even if they get, 200, 300 views, I'm thrilled, because I'm like, hey, you know what? I'm resonating with some fellow stock market traders and investors that love what they do, and that's fun. So if you want to check out my stock channel, you want to support my growth over there, please only check that out if you are actually interested in stocks. The question about, is Apple on the path of Nokia? I don't know if it's, going to be completely obsolete in 10 years. It may be, companies that are on top today are not necessarily on top anymore in 10 years time. But I think the more likely path for Apple, in my personal opinion, is that in the coming 10 and 20 years, Apple will not be the same level of impact on the markets, the stock market specifically, that it has been in the last 20. That's my personal opinion on it. I love, the product. I think it's amazing, but it's going to be very hard to replicate a stock performance when you don't have a Steve Jobs making such innovative, massive changes to the business, and launching the iPhone, and launching, the iPad, and being involved in so many groundbreaking products. That's why Apple stock has performed so well during that time. And I don't know that you're going to get a repeat of that type of performance in the next 20 years. Maybe I'm wrong. Microsoft has proven to be able to stay on top of, the S&P 500 for decades now. So, I don't know that Apple is headed for the dumpster, but I don't know that it's going to be a top performing stock in the next 10, 20 years personally. There you go. You got your V-Buck conversion. Thank you for that, James. Yeah, I think I need to start funding the Edge Finder. I think I need to do a Fortnite affiliate code or a promo code or whatever. Use code Trader Nick and get yourself some V-Bucks and whatever. But anyways, Aftab says they've been trading for 1 to 3 years. What's your primary goal right now? Learn more about fundamental analysis. Hello, Nick. What about pound dollar? Can we buy on this pullback or wait for more? I talked a little bit about pound dollar already. I don't love pound dollar as much as right now. I'm a little bit more bullish on euro dollar, but specifically what's costing some points on the Edge Finder for the pound right now is the COT data. You can see, I can see it on my heat map right here. Like the commitment of traders data is costing some points, but we get fresh COT data this afternoon. So we'll see if that impacts the British pound score. By the way, just a quick plug before we move on. If you guys are interested in joining our Discord group, we've got a really big discount going on for the group. So anytime I take a position, right, you can get notified in our Discord server. This gets notified to your phone. So if you want to get pretty much a message sent to your phone anytime I take a trade, or to your Discord on your desktop, you can actually unlock access to that. That is something that we sell. These are trades verified that are, I've shared my public track record to show that this service is worth, spending money on. We do have a lot of support that goes into handling members and answering questions. So if that is something that you're interested in, if you'd like to see the trades that I'm taking, when I take them, with context, entries, exits, analysis, here's how you can currently get 45% off on the Discord VIP group. It is the biggest discount that we do all year long. And if you'd like some information, click the link that has just been dropped in the live stream chat while we speak. Take advantage of that 45% off sale. It is ending soon. And all you have to do is just send a direct message. We have some support staff who is standing by who can get you set up with a membership while that discount is going on. So do not miss out. Come join us. I'd love to meet some of you guys in the Discord. I've met several already. And it's always nice to meet new faces of traders who are serious about this stuff and, want to take it to that next level and trade with a group. Anyways, let's keep going with our questions here. Jesse's been trading for less than 1 year. Their primary goal right now is to learn more about fundamental analysis. I fell down the rabbit hole of YouTube trading and just recently started a new funded account, but swing trading fundamental analysis, and so far, so good. My question is, how can I better understand the news and currency pairs, as well as because I know certain currencies react differently in different times and it gets confusing? What should I be trading and when should I stay away, like when we have tensions in the Middle East, like right now? Okay, great question. Yeah, so sometimes people wonder why trading has to take so long to figure out. I know I did. When I first got started, I was like, I keep hearing people telling me that trading is going to take me 5+ years to get good at. And I didn't understand why until I stumbled into fundamental analysis. And I realized, like everything else worth having in the world, it's going to come at great cost and hard work. So fundamental analysis, people ask me that all the time. How do I know, how everything is going to be impacted fundamentally? Now, I built a product, as I just got done discussing, that helps to understand fundamental analysis, to understand how economic data, for example, is impacting our favorite currency pairs, commodities, indices, etc. We've built tools to help bridge the learning gap that I know many of you guys know exists. Like, as well as I do, if you've been trying to figure this stuff out on the fundamental side, you're like, holy crap, Nick, this is hard. There's a lot to learn. And guess what? I'm still learning every single day. So I'm by no means I've figured it all out trader, right? I'm still learning. I am profitable. I've done well over the years, but I'm still learning and improving just like everyone else. Fundamentals is a persistent and consistent journey to get better and better at over time. Understanding how certain things impact, there's no shortcut. Open up your charts every day, learn something new, show up to the streams, be here on time, take notes, learn for free. And if you are, really investing your time and energy into this and you say, I'm taking this stuff to the next level, join the many thousands of people who have picked up a copy of the Edge Finder and have dramatically sped up their process of learning fundamental analysis. I know that's a sales pitch. It is a sales pitch, but it's kind of like if you want to learn something, learn from somebody and something, some tool that has clearly been paved through, right? The Edge Finder is a paved road rather than trying to push through the jungle of fundamental analysis. Dang, I just unlocked a new analogy. Somebody commented on my video yesterday. They say, Nick, you do some great analogies. And my ego flared higher than the sun. Okay. So you can't be telling me that. You cannot tell me my analogies are good because my ego will go through the roof. Thank you, Ball Out. My analogies are bad. They're not good at all. But here's my analogy of the day. The Edge Finder is a paved road to understanding fundamental analysis rather than going through the jungle to understand fundamental analysis. Okay? You still got to drive down the paved road. You still got to go down that path. It might be a long and perilous paved road, but it's a heck of a lot better than trying to push through the jungle with jaguars and snakes and gorillas and all these things coming at you, and there's vines in front of you and trees in your way. That's trying to figure out fundamental analysis the way I did it. It was painfully slow and grindy. And you're always going to have struggle to learn anything, but you should consider investing in a copy of the Edge Finder or investing in someone's course if you believe that would be helpful too, if you're trying to learn fundamental analysis, or at the very least, even if you don't want to spend a dime, totally get it, put in the work by watching my videos and live streams or other top creators that are fundamentalists. Many of them come on this show, right? There's no shortcut. That's the long story short in what we just got done discussing. If you're wondering, what currency pairs are going to get impacted, when should I know to avoid certain things? How does the Middle East conflict get your reps in? Just like going to the gym, you're not going to get in shape by going to the gym once. My gosh, guys, the analogies are just flying off the shelves on this Friday morning. If my wife was watching the stream, she would roll her eyes so aggressively because she always says I'm way too cocky with my analogies. I think I take pride in them. I'm not gonna lie. I take a lot of pride in them. If my wife has never made the mistake of telling me my analogies are good. I appreciate you guys, people saying my analogies are great. Thank you guys. But just tell my wife never. And don't worry, she won't. My wife will never tell me that my analogies are good because she knows the second she tells me my analogies are good, it's over for me because I can't have good analogies in an argument at home. Are you kidding me? I'm dead. Charles, I saw that on Twitter. That was funny. James sent me that too. That's funny. My wife is always right. Only person that has better analogies than me, no matter what, is my wife. Even if they're not the best, they're always better than mine. Anyways, I'm totally kidding. If she's watching this, I'm dead. It's been nice knowing you guys. You won't see me Monday. Okay, next question is from Glenn. They've been trading for 3+ years. Primary goal right now is to learn more about fundamental analysis. Hey, Nick, is it true that institutional players do stuff like scanning satellite images of Walmart parking lots for better predicting retail sales and tracking cargo ships across the world to assess commodity trade flows and such? Yes. Anything that can give you a quantifiable edge in markets, you bet your bottom dollar. Smart people are figuring out ways to spot things before the market knows about them and trading based on it. That's the name of the game. So yeah, no, that stuff definitely happens. Can we be doing that stuff? Kind of hard to do. However, trying to arbitrage that out is there are creative ways. I mean, the markets are full of people coming up with creative ways to know something sooner than other people and trading based off of it. But even still, it's very difficult. Even if you had, hey, ship containers are more than usual for Walmart stuff, there's still other things that make trading and investing hard, right? Maybe their profit margins actually shrunk even though they did more sales. That is possible to do too. But yes, that stuff totally happens. A lot of, that's a pretty creative one, but there's even less creative ones that people do all the time. Like, for example, just internal systems at big companies, especially like, for example, if you worked at Amazon, you just have tons of data at your disposal, and you're not supposed to trade necessarily off of that. But there's some gray areas. Like if you worked at Amazon and you saw like orders from, I don't know, some other big company just massively ticked up, that's still, I am not encouraging anyone who has that sort of information to trade based off of it. I'm just saying that people probably do. So yeah. 10 Swallow says they've been trading for 1 year or less than 1 year. Primary goal right now is to trade or learn more about fundamental analysis. Which other chats have opposite moves when comparing, like a DX? Oh, what other charts move opposite when comparing things like dollar index or gold as an example? It sounds like you're talking about correlations, and correlations are a fun topic. There are many things that are inversely correlated or positively correlated. So for example, if I'm talking about, let me see, what's a simple example? The Canadian dollar and oil tend to move in a similar direction. Not always, but often enough. Cryptos across the board tend to move together. Indices tend to move together. And then currencies, there are some currencies that tend to move together, like euro and pound. They have similar economies. The Australian dollar and the Kiwi dollar, those ones tend to move together. Japanese yen moves, I think, most of the time inversely to like risk on assets like Bitcoin and NASDAQ, but you'd have to go study that. I'd encourage you to look up on your trading view, look up the correlation coefficient and play with that tool. It's a really great one to learn stuff on. Okay, let's see, what do we have here? James, I just saw your Discord message now. It's okay for now, but for future polls, yeah, that's a great idea. James was saying he could make a YouTube poll for something. I think that's a great idea for some future polls. Not sure where Kenzo is. Yeah, no, we'll see. He might be fashionably late. That's okay. Next question here. Oh man, we had several new questions. Okay, I'm gonna try and speed run these. Thoughts on the dollar? I already went through the dollar. Just rewind the stream. That might be the easiest way to do it. Cosmo's been trading for 1 to 3 years. Just wanted to ask Nick, would you ever trade the way you trade on indices or Forex? As in, would you not go for a dollar cost average, or would you only go for a dollar cost average trade? So I have in the past, I prefer a dollar cost averaging approach when I trade currency pairs. They're very choppy. They don't have kind of a long-term direction that they often, long-term respect. Like for example, a dollar index could go sideways or down for the next 10, 20 years. So I don't love that like unbound status for trading like long-term momentum trends in currencies. I tend to like currencies more as a mean reverting asset class rather than a momentum one, but there's still momentum styles of entry and exit that you could use if you had a bias on currencies. I just prefer the dollar cost averaging approach, especially where I'm at. This is a little bit, I know, dollar cost averaging tends to favor having a little bit larger of a trading capital size, but it can still be done on decently small trading accounts. Now, when I say that decently small, it depends on who you're referring to. In the United States, a $10,000 trading account is still kind of considered small. In other parts of the world, maybe not so much. But with a $10,000 account, for example, you could still dollar cost average with 0.01 lot sizes and probably do just fine. So I have a couple different Forex brokerages. Some I have smaller accounts that I have smaller accounts with that I trade dollar cost averaging on, and some with much larger account sizes that, I also do it. So I just prefer the dollar cost averaging style. It's way more passive and I'm more long-term focused in Forex anyways. So it works well for me. Dragon says they've been trading 1 to 3 years. Hi, Nick. I wanted to ask if you could take a look at the DAX. I have a bullish bias What's your opinion on the fundamentals? Yeah, DAX kind of falling into the same. Here's the thing. I loved the DAX at this level, but let me take a look at the economic heat map. We are getting a strong reading on this. I need to look into why this is not getting a stronger reading on the edge finder. If I go indices, like what's going on with the DAX? What's costing us here? Trend to the downside here recently. PMIs. Is this right? I need to check that this is okay. Hold on. Let me take a look. If I go look at our economic surprise meter, manufacturing PMIs beat expectations. So this is definitely a coding problem that I need to fix, because services PMIs and manufacturing PMIs came in better for Europe than expected. So I'm writing this down right now. So this is an error on the edge finder that I got to fix. It is not the first time. It is not the last time. It's a constant maintenance and fixing concept. But yeah, the DAX, let me just think about this for a second. If we had PMIs both positive, this would be a factor of 4, right? Because then we'd have +1 here, +1 here. That's a factor of 2 on each, right? So that would be +4 from where the current score is, put us at +6. This would be a bullish reading. So I like the DAX too on the fundamental side, and I will sort this out ASAP when the stream ends. I'll send this over to the dev and we'll get that resolved. The DAX should actually be a bullish reading based on what we just got done discussing. PMI numbers came in better than expected for Europe. So that should be a positive reading, and I love that setup. Thank you for bringing that up, because the DAX might be one that I actually buy today. So I'm going to look at the DAX once stream ends, and if I take a trade on that, I just need to double check. I'll take a closer look at the code on the back end for the edge finder. But that is, I love the chart, right? Pulling back here. I know trend on the edge finder gets a -2 here. We can actually just pull up the trend filter here. You can see we have had a little bit of a rollover effect in this one, but I still like this longer term level support, and enough of the factors on the edge finder are bullish that I would like that setup. So I beat the edge finder. Let's go. You did. Well done. I appreciate that. Actually, you pointing that out. Anytime somebody catches the edge finder calculating something wrong and sends it to us, I greatly appreciate it. And look, the edge finder is a work in progress. Always, we're always consistently improving it. And there are some times where it's just like something breaks, but it's been very rare nowadays. The scoring algorithm is pretty tight, so we have not had an issue in a long time. But I don't know how this happened, but it may have just been something accidentally got tweaked. So thank you for pointing that out. Appreciate it. So update on the Russell position. I'm still long. However, always a little bit confusing, because what I do is I can't trade CFDs in the United States. I trade actually IWM, but I use CFDs to track my positioning. For traders who watch in our VIP signals group, I use CFDs to track what I've been doing, because it's more universally understandable than like IWM, the ETF, because most traders outside of the United States can't access all the same ETFs that I can, and I can't trade CFDs. So it's a little bit confusing, but the reason I bring this up is because I stopped out on the CFD, but did not stop out on IWM. The reason for that is because IWM has different trading hours, and it was closed when all the craziness happened. So I never got stopped out of the trade. So I'm still in my IWM position, but re-entered my CFD position. So I am still long IWM. The Russell, I love the way we've reacted off of this area here so far. A nice bounce back here since then. The trailing stop for me has just been adjusted. And I do think that the path of least resistance for the Russell is to continue higher. I know we had the geopolitical tension stuff, and I hate to say this, but most of the time I use those as opportunities. I don't hate to say it. I mean, it's just markets, but it is an odd thing. A lot of times when that freak out events happen, those are really really good opportunities most of the time if I like something that gets thrown into the sell-off to actually add to the trade. So I didn't do any adding to this, but I'm still in my Russell trade and would love to see if we can rebound here, move higher from here. What do we have? We have Chris Pulver coming on at 10:15, I think. I was thinking about getting an edge finder. You still should. You need to get an edge finder so you can keep an eye on things for me. Love this product. I appreciate it. You know, the edge finder has a really awesome following of people. It's really cool. Like the amount of emails and messages we get about people who are like recommending new features and things like that. It's a really cool experience to be on the development side of a product that people love. It is motivating truly because people are like, love what you did here, or can you try fixing this, or can you add this, or can you tweak that? And of course, we can't say yes to everybody's edit requests because there's just simply too many big things to build. But it's been cool just to see the way we design new features on the Edge Finder is we do surveys. We also do just kind of like what the community says they want to do. We do. Like if we keep seeing somebody say, hey, can you build this? If we get that message over and over, we end up building it because it's clearly what people want. So that's how we've kind of guided the development of the tool. Quick look at gold here. Gold back to those highs. Very, very strong. Are you from Atlanta, Nick? I am, yes. US stock market's been open for 30 minutes. Let's just take a look at the 1 minute chart. 9:30 bell, stock market pushed higher. We're now coming back down here. Delta Airlines had drop off here overnight. PayPal selling down 3%. American Express down 2.4. Airbnb down 2.2. I have calls sold on AXP and Airbnb, so and Delta. So I may look at those as opportunities to actually close my calls that I shorted and maybe take some profits on those today. We'll see. ExxonMobil moved higher here. Just getting to stocks for just a second. I just wanted to see how things are moving. Meta is a stock I own, going quite well. Very nice. I guess we have more time to do questions while we wait for Chris to arrive. If you guys have questions, drop them in the form. We'll just send that. Oh, we have some news here to go through. Hold on. Let's see what we got. Michigan consumer sentiment and inflation expectations. Let's see if this does anything. Sometimes it does, sometimes it does not. 60.5 consumer expectations or consumer sentiment, actually very positive. And inflation expectations down from the previous 5.1%. Here's a look at the 4-hour chart on the S&P 500. Interesting stuff. Also, here's another thing I need to plug really quick. We have a webinar coming up next week. Let me see if I can get this shown to you guys. So I have something cool that we're doing next week. We have a webinar event that we are doing pretty soon here. Let me see if I can show you guys this. I'm going to drop the link in the chat really quick. So check this out. So we have a webinar that's coming up next week. Chris and I are going to be doing a Trading the Second Half webinar event. Now, what we're planning on doing during this webinar, and by the way, this is completely free to attend. How is this different than a live stream? Well, this is going to be a really detailed, planned presentation from Chris and I on things that we're watching for the second half, not necessarily for the next 3 days or the next 2 days, but rather some themes and ideas that we're planning on trading in the second half of this year. So if you'd like to register for this event and come join us, it's happening on Monday at 9:30 a.m. Eastern Time. That's 2:30 p.m. UK time. It's completely free to join. If you would like to attend, register here. If you cannot be there at that time, still register, because we will be sending out the link of the recordings of that event to people who can't make it on time. 110% chance, 110% you should register for the event. Even if you can't make it personally live, totally fine. The recording will be sent to you. And I'm very excited for this because I love doing these. We've kind of been doing these like once or twice a year, Chris and I, where we do these events where Chris and I will map out, thematics of what we're thinking for markets. Do we think, generally speaking, what's the outlook for gold in the second half of 2025? And being on the right side of this stuff, I know we talk about like, oh, the 4-hour chart trend right now is this and that, and that's great. But thematically, fundamentally, for the next 6 months, how do things look? And that's what we plan on doing in this upcoming webinar. Completely free to attend. The link's just been dropped in the live stream chat. If you're watching this back at a later time and you're like, wait, how do I get that link? Join our Telegram channel linked in the description of this live stream. Scroll up and find this message, and you can use this link to register. By the way, if you'd like to join our Telegram channel, we'll drop the link in the chat now as well, to where you can join that completely for free. So just a high-level perspective for those who are hanging with me here today. A1 Trading, our business model is pretty simple. We offer like 95% of everything we do for free. Free content, free chart markups, free analysis, free videos, free live streams, free courses, with the idea that we actually can help people to improve in their trading by offering genuine value, not behind a paywall, but for free. Now, we're not doing that because we're saints. We're doing it because it's our business model. We help traders genuinely with free value every day. And then if you like our stuff and you want to work closer with us, then you can consider joining our VIP stuff or getting access to the Edge Finder. So our model is like 95% of stuff is free, 5% of stuff is paid. And that's how we do stuff, and that's how we always plan to do stuff. Now you're going to see other creators. And again, I used to find that so frustrating when I was learning. I'd be like going down the path of meeting a new YouTuber or something, and everything that they did was just behind a paywall. And that was really frustrating. So I was like, you know what? What if I just offered stuff for free most of the time? And then if you really want to buy something if you really jive with what we do here, if you really like what we do, our customers are people who are generally like big fans of the methodologies that we discuss here on these streams, the tools that we use, right? They're big fans of those things. And that's the way we do things. I'm not, like I said, it's not, Aaron says Saint Nick. It's not Saint work. Like it is a business, right? We offer value just like, and that's any good business, right? Any good business. Like, for example, think about Google. Google's the best at this. They offer you free Gmail, free everything, free YouTube. What you're watching on for many of you guys is a free platform, free, amazing value. And guess what? I spend tons of money on Google stuff because they got me. Their stuff's so good. They offer such value to me. And now I spend money with them and they're worth every penny. That's the model. Anyways, let's take a look at some more charts here while we wait for Chris. He's coming up, taking a quick look at yields moving back higher here today. So you got yields moving higher at the same time the dollar's moving higher. Little bit confusing at first. But the big reason is because we're having a little bit of a risk off response to everything today. You have Ethereum down 4%, Bitcoin's down 1%, copper's down 1.6%. That's risk off. Gold is up back to the highs. That's risk off. Oil's up 5%. That's risk. It's geopolitically risk off, right? Stocks are lower. That's risk off. It's a risk off day. VIX is up almost 13%. This is a risk off type of day. Now, I'll tell you this. On an event like this, do I freak out and sell stocks? No. In fact, these days, when these types of days, when we get a flush in the markets, I use that most of the time as an opportunity to go buy longer term stocks that I like. I use it as an opportunity to pick up trades in things like the indices. Like this does not make me bearish on the indices. So if this does not make me bearish on the indices, but the indices are moving lower on this, what do? I find my entries. These are days. I know that's weird because it's like, so you have some freak out in the Middle East, something, and I don't mean to speak down on the impact, the importance, and the realness of what's happening there. That's not what I'm saying at all. I'm just saying, does this truly change the trajectory for the indices for me? No, it does not. Again, very serious matter, scary stuff, and all we can do is hope and pray for peace, right? That's not what I'm saying. I'm just saying that, does this change the trajectory for me on indices? No. So a down move here is going to be, for me, an opportunity to look more at possible long setups that I can find. The Dow Jones was sitting at resistance here. I can't really, I can't do anything with the Dow Jones here, but if you were to give, a break higher here and a pullback. And then this morning we discussed DAX. In fact, what I'm going to do really quick, guys, if it's cool with you, just stay there, is I'm going to message our developer. DAX PMI scoring needs to be inverted. Euro PMIs, services, and manufacturing were better than expected. Should produce +1 for DAX each. Okay, so what I'm referring to there is that there was an error that we discovered while streaming today, and I write those things down, but I like to. It drives me crazy when I recognize something is wrong in the Edge Finder. Like, I'll get up in the middle of the night if I think of something, and I have done this. If I think of something or I recognize something is wrong in the Edge Finder, I will just jump out of bed because it bothers me until I can fix it. So I just sent this message to our developer, letting him know that the DAX PMI numbers should actually be a positive impact on the DAX. Let me show you what I'm referring to. Let's show you the error, because I think showing you this error will also maybe help someone out there to understand the Edge Finder a little bit better. Is your Edge Finder developer a trader? No. We both are the developers. He is the smarter developer. I am the UI side more and the trading side. I have a background in software engineering, but this guy has, to my background, he has, he is Beethoven, right? That's the difference. So he's the Beethoven. I'm the guy who tunes the piano. But the PMIs should actually be producing a positive impact for the DAX right now out of Europe, because both the services and manufacturing numbers came out better than expected. So forecast numbers for 48.4 came in at 49.4. These were better than expected numbers. That should positively impact the score on the DAX, right? Steve Jobs and Steve Wozniak. That's funny. Do you guys know what's that trading meme? What's the Wozniak? Do you guys know who I'm talking about? There's a what's the guy's name? There's like an animated Wojak. Yes, got it. I'm Wojak. He's Let's think. He's Warren Buffett. I'm Wojak. In terms of developing understanding, but anyways, so what I wanted to show you is that this score, right, should be positive for the DAX in the final top setups algorithm. And currently it is erroneously showing negative scores here where it should be positive. They beat expectations. That should be positive. What are the odds? I think it should just be a score flip on the output in the main scoring algorithm sheet. Okay, I think we'll have that fixed soon. But yes, I do like the DAX. I'm going to look at it after the stream. But this is probably a long setup for me on the DAX. I think I'll trade, is it EWG? EWG is the ETF that I can trade in the United States for this. There's got to be a different one though, because this look how different the German 40 is. And does anybody know a German 40 ETF? I've traded EWG before. Let's see, DAX funds. DAX. But see, why does this look so different than German 40? Maybe it's like two different indexes. Anyways, we'll see. Gold sitting back at those highs. I'm going to look at the DAX after the stream. If I take that trade, iShares MSCI Germany ETF. Yeah, that's what I was looking at, EWG. Yeah, so I might buy that. I'll be looking at that after the stream. If I take any trades, like I said, I will be sharing it inside of our Discord group, and you can get notified with any new trade positions that I take. If you're a member, we're doing 45% off for a limited time. Both. If actual greater than forecast should produce +1. The magician is working on it right now, guys. We'll have it fixed soon. We should have Chris Pulver doing in the stream in just a moment. Japanese yen here down slightly this morning. Dollar index. Yeah, we'll see how dollar index responds here. If you take a look at like the 4-hour chart, did we come back up to this? We like narrowly missed this resistance level on the 4-hour, which is that previous low. Chinese stocks also moving lower here, 1.5% down for the Hong Kong 50. The Nikkei's down slightly. Oil up 5.5% still. I talked about earlier, or oil I talked about earlier, probably would have to wait for a pullback to like this 61.8% retracement. Just not quite able to justify jumping in here. I do like the bull case for oil. What is the scoring on oil currently? Let's see, commodities. US oil is getting a +4. Retail positioning, PMIs out of the United States. Now this is correct, right? PMIs out of the US were weak. That is not positive for oil. So I'm going to keep an eye on oil. We'll see. NASDAQ still top of the list. Bitcoin still top of the list. CAD yen. Let's look at CAD yen. Still pretty range bound here. Many of the yen pairs are. Sort of sitting at resistance still. CAD yen would be interesting if we got kind of a breakaway movement here. Would be really interesting. I know this is not original, but my favorite financial movie is The Big Short. I also love movies about Bernie Madoff. There's a couple Bernie Madoff movies that I love. They're very interesting. If you don't know who Bernie Madoff is, he's the guy that ran a ginormous, I think it's the biggest of history, Ponzi scheme. Or one of them. Maybe the FTX was bigger. I'm not sure. Questions we can jump into here really quick. Belint says they've been trading for 3+ years. Dear Nick, I had a question about the Edge Finder. It's been on my mind for years. Since you're able to ask questions here, I'll go ahead. You're pulling data via APIs, which incurs costs on your end. So why not develop the infrastructure on backend server and build the front end as a more advanced application? You could start as a side project, for example. That way, Edge Finder could have a much more responsive interface. There's no need to rewrite everything from scratch. They're amazing JavaScript and UI frameworks now. Yeah, I mean, to be honest, Looker Studio from our needs currently works great. In the long term, we may move to another platform, but it's very easy for the user. And also, we have so much development to do with our products that we have to prioritize things. So completely moving to a new platform, it is somewhere on the list, right, of things to do, but it's not like highest priority. So I totally have thought about it many times. Like, should we move to a new platform? And we may in the future. But in terms of like that would be like a 6-month long project, and we just have so many other things. So it's a good question, and I'm not discrediting the idea of potentially building it into a cooler platform in the future. But it's just, where is that on the priority list? It's pretty low in terms of Looker Studio. People love it. A lot of people really enjoy using it. Sure, could it be maybe some better improvements down the line? Yeah, but from like I said, a need perspective, that would be definitely lower on the list, at least at this time. Why is dollar also rising along gold? Risk off. Safe havens. They can move at the same direction. Hi, I was a profitable trader for 2 years, making $1,000 a month, but I've lost it through pride and ego and friends that finessed me, which triggered a downfall. I lost everything, including my psychology and discipline. Feels like I'm starting over from a losing trader. Yeah, I mean, the thing is, unfortunately, in this trading stuff, there's been so many people who have messaged in horror stories. Somebody messaged in earlier this week, I lost $40,000 just paying for prop firm challenges and never got a payout. There's so many nightmare stories out there, unfortunately, in the trading space. People who lose everything, people who make big mistakes, people who get scammed, there's a lot of ugliness out there. All you can do in the trading world is recognize that anything that seems too good to be true almost certainly is. Everything is a grind. Everything is a lot of work. To get good at trading is a lot of work. To grow a trading account is a ton of work and very unlikely to be done quickly without blowing up. All of the principles that we talk about over and over and over, discipline, patience, consistency. I know that stuff sounds, it sounds like frou-frou, whatever motivational junk that you see but it's so important for trading, because a lot of people lose everything in this stuff because they don't take things slow. They rush everything. So all I can say to people who are going through serious struggle with this stuff is, forgive yourself for mistakes that you made in the past, and then never make them again, and never try and take shortcuts in this stuff. Embrace the long game, embrace the hard work that's going to go into improving your approach, and just never give up. Truly, like, there's no other way to say it. Like, you have to just have incredible grit to make it in trading, and there's no getting around that. Everybody I know who's a profitable trader has gone through a tremendous amount of suffering to get there. That's the reality. It's going to take a lot of time and effort. And if you're down for that, if you're like, I still love it and I accept that it's going to be hard, it's just like working out and getting in great shape. Like, that's going to take a lot of work and effort, but I love it. Like, if that's you, you get it. If that's not you, if you're like, I'm not willing to invest years of my life, blood, sweat, and tears, and money and time and all that, then trading might not be right for you. And that's okay to acknowledge and do other things that you care more passionately about. Up next, guys, we got Chris Pulver taking over the show. Stay tuned. I got to go get some water. My throat's killing me after that. I hope that you enjoyed the session here. If you did get something out of it, consider subscribing. We're here Monday through Friday, and Chris Pulver's up next to take over the stream. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Friday. So markets are down, and we have a rising Middle East conflict. Things escalate a little bit geopolitically. Not China, not U.S., not trade war. This is a missile strike from Israel to Iran, taking out some nuclear facilities. So we see some volatility. We see oil prices jumping up. Oh my gosh. That is a squeeze and a half, ladies and gentlemen. And this is the type of silly, this is the funny business that I didn't like about oil. It, was contain. It's like, as well as I do that this doesn't stay like this. So I'm not surprised. I also wouldn't be surprised. This is, let's find out what happens next week. But would anyone be shocked to see this thing spike up and then fade all the way back down to 65 again? I wouldn't. Obviously, if we get, much higher movement in oil, that's going to be disrupting all sorts of things for like this lower energy prices. And anyway, that's a big move. I mean, we've had a rip on oil since this double bottom around 55. Oil's up 40%. Now it was that today's high. Gold getting some safe haven flows. So we've got 3 days of upside on gold. The highs are still around 3,500. Silver has paused after a nice breakout here from early June. I still like silver a lot. If you get a pullback towards like 34.75 or 34.50, I think those are good stocks to still look to stay in it. Bitcoin hasn't really bumped a lot. So we're at 104. There's still levels to fill around the 100K mark. We could still get to like 98 or 97. That backfill would make some sense to me. There's a nice little cluster around that 95, 96 zone. There's a lot of demand down there. If Bitcoin came back to 75, I'd be a little bit more. I'm not concerned necessarily. I'd be a little bit more frustrated. Like, all right, so I guess we're not super bullish right now. We're just gonna have like a big range trade. So maybe it's a large accumulation. We came back to 75. As long as we hold probably, I'd say 95,000. This looks like just another pause and pullback, and then we'll ultimately get some risk appetite to come back and make new highs. But funny enough, like I just finished up a live session this morning, and I talked about it this week. We talked about this yesterday. End of this month, which is only just over 2 weeks away, on the 30th on Monday, we can go ahead and make this proclamation. I wouldn't be surprised if the SPX is trading less than 59.05 by the end of the month. Now, all the stuff with Israel, all the stuff with Iran, all the stuff with geopolitical escalations, all the stuff with what the US is going to say. I said this days ago, okay? This is order flow. This is liquidity. This is what I think truly ends up driving the market. The market can have some, like it can extend a little bit further one way or the other, but for the most part, this market is very like efficient and priced in. And things get a little wild. Yes, I like nobody expected the market to do as aggressive as it was through early April, and then the reflexivity of what it did, like this melt up that we had since late April and early May. But this is a price action level that was established literally March 31st and April 1st. This level, and here we are, just a couple weeks away from it. And just to see how powerful it is, if you go back to the level, this same level that I'm now saying is 59.05. The level I was watching back in Q1 was 55.65. So I'll type that out, 55.65, okay, at the end of March. Look and see how important that level was. Let's put our line on here at 55.65. So 55.65 is right there, okay? And towards the end of the quarter, look at where we were. On the 28th, okay, that would have been a Friday, and March 31st would have been on a Monday. Is that correct? I'm going to go back to March here. Sure enough. So the 28th was Friday, March 31st was Monday. Similar to how this Q2 is going to end, is we have a 30th of June on Monday. Point is we had Friday dumping hard, Monday opening lower. But what did it do? It opened lower, tested lows, and ripped up about 2+% to close above 55.65. So this strike finished out of the money. That is what I'm saying for this 59.05, is that if the markets fall below this, this finishes out of the money. That's option pricing. That's how important stuff is for where prices ultimately are going for these big expirations. End of the month, end of the quarter, big expiration. If we're below that, great. This finishes out of the money. JP Morgan can put on a new collar trade or new ceiling, new floor for Q3. And I'm curious what those numbers are. They're anywhere between like a 10 and 20 delta. So I can look at the option chain, get a rough ballpark, and then I'll see it pop up on my liquidity levels. Okay. So I'm just throwing it out there. Don't be surprised if we're less than this by the end of the month. To me, this is a good opportunity to see if we get a pullback into some more attractive levels. Obviously, like a new wrinkle in the risk parameters of, hey, we've got this geopolitical conflict going on. Okay, so does that mean that this whole trade war takes a backseat to something else, like escalated tensions in the Middle East? How many times have we said that the last 30 years? It's always been a hot spot for conflict. So what do? I don't know. But if we get a pullback in price, I'm still going to focus on good buying opportunities with a wide margin for error. This is going to be a lot of my focus next week in our half year review. So my mid-year review, a lot of that's going to be spent talking about just safe strategies, kind of the big macro picture, and kind of my favorite assets to trade right now to survive whatever this market's going to give us. Try to make some money. Okay. Any questions? So write it down, put it on your charts. 59.05 SPX. I wouldn't be surprised if we're below this coming into the end of the month. It's only a couple weeks out. So to me, since we did not poke new highs and we're starting to roll over a little bit today, does this rollover get a little bit worse? Because if that's the case, we're probably pulling back before the end of the month, and then we come into July and see if July can be like another, maybe another bullish push. Summertime usually slows down, and this little melt up kind of rising wedge situation could also ultimately be breaking structure. So I put some pretty simple trend lines, try to be as technically sound as I could, connecting this low to this low to this low to this low to this low, and price today is actually starting to push lower. And so what I did this morning in one of my trades is I wanted to stay out of the way of the floor, but rather put in a ceiling. So the trades I have running, it's a bear call spread and broken wing butterfly up here. So if price stays below these blue lines today, I'll keep full credit on those trades. Because if I put a floor in and all of a sudden the floor just falls out, I don't want to be in the hook for what's been low volatility to then a big spike in volatility. We know that we could have like a 1.5 to 2% sell-off day. I didn't want to call the bottom. So I'm sticking more with like call the ceiling today. Price is unlikely to go back to 60.50, and that's my trade. So that's my day trade on SPX. I did some rolls yesterday on Tesla. I took a winner on Dow. I've got some diagonal spreads. Let me see if the bond market's spiking at all. So TLT not getting really a safe haven bid at all. It was up to 87. Now it's back down to 86.40. Yields maybe jumping. Yep. So 10-year yields jumping again. All right. 20-year yields jumping again. 30-year yields jumping again. So it's kind of an ugly move on yields. We've got mortgages. 6.84 is the average mortgage right now. Futures market, a little wild and crazy. Anything happening? Oh, there's a big jump in the commodity index. I was literally just talking about this week. Watch the commodity space. We are seeing some moves here. A lot of this is just oil. Oil had a huge jump. So DBC, this tracks a lot of things like corn, oil, gas, soybeans. I don't know if it has nuclear in there like uranium. Let me see. Precious metals, industrial metals, agricultural sectors. Yep. So I played this actually. I played this one a lot during COVID. This is a great trade during COVID. I bought this thing for like $12, and this was my like Q1. This is my like first half of the year of COVID. 2020 was pretty profitable. We went from basically a $10 stock to $30. It's a pretty good gain on a commodity-based stock. It's been pretty crappy since. Soybean oil, yeah, there's probably some stuff hitting some max levels today. I'm still long on uranium. We're at 35.80. We do have some overextended conditions here, but I put a trade in this week on Oklo. I added that to the pulver alerts. So this one's pretty much out of the way. Like I did a 32 by 30, so it should be a pretty simple income trade. Everyone's been talking about this and chasing this and trying to get new highs. It's not my style. I don't like to chase things when it's already up, whatever, 100%. I mean, this thing's up 278%. I'm sorry, but I'm not excited about buying highs. So I positioned for a 32 by 30. I'll own shares at a massive discount. If we drop to $30, I mean, that's a 56% decline and discount. I could own some shares and say, well, I'll start my journey here, as opposed to I'm going to chase this thing after being up 200 and some percent. So anyway, just another added trade. I added a trade in on Pepsi this week. I added a trade in on Robinhood this week. I added a trade on Progressive this week. So just looking for some additional opportunities. China, a bit of a pullback the last 2 days. CQQQ still sideways. Alibaba still sideways. Baidu, again, sideways. FXI, I've got some shares of this. KWeb, nothing right now. JD, I'm still covered calls at 36. Schwab dividend, climbing back. I mean, I bought this thing back in around the 25 handle. So I got a few bucks there. Schwab growth, same thing. Bought this on the, I bought this on the 200 moving average. And when it came down to this low, so I had a buy in the 200 and a buy at support around 22.50. So my break even is around 24 and change, and I'm up a couple bucks there on growth. Advanced decline, how many stocks above the 50-day? Still trying to make a push with this 50-day. Might be the timing for the market to turn. The 200 still about 51% of stocks above the 200. NASDAQ, a lot of the stocks in the NASDAQ are getting above that 50-day moving average. This wouldn't be a surprise to see a bit of a pullback coming sooner than later if we get up towards like the 91, 92% technicals here on market breadth. This is the 200, where 67% of NASDAQ stocks above the 200-day moving average. Okay, individual stocks today. Let's go FinViz. I mean, doesn't look good for U.S. stocks this morning. Everything's broadly down. Market's down. Even if we, fight back, I feel like we're still going to have kind of a red day overall. Financials down in a big way. That's probably the interesting, bright spot. Just all red for MasterCard, Visa, Amex, Capital One. PayPal's down as well. That's actually, is that a big enough move on PayPal? Let me see. I've got a trade in on PayPal. PayPal at 71. I'm going both directions on PayPal. I just needed some volatility and we are getting it. So I am flat on this thing. I've got a 70 by 62.50. So if we drop hard on PayPal, then I've got some profit potential here. So, all right, I'll see. What else? Heat map. Bigger banks down. Boeing way down. We got another. It was down 4% yesterday. It's down another 3.64% today. Meanwhile, in the aerospace and defense sector, Lockheed Martin is up. RTX is up. General Dynamics up. So GE Aerospace and Boeing down, but some of the other, especially the defensives, are up a little bit. Energy, big pop in energy with that squeeze in oil. So I'm long Chevron. So CVX I have shares of. I don't think I have shares of XOM any longer. I took some profit on that one. So let's go here. I know I have CVX. So CVX shares are now starting to turn profit just a little bit. So let me take a look at the price action, 146 on CVX. Okay, I bought off the lows. I'm going to see if we get it up to range highs. So, back in the middle here around 160 and change, maybe back up to range highs at 180. To me, this is a pretty good looking trade. Without going aggressive on the size, I'm doing just a simple dollar cost average in. I'm buying about $1,000 per account worth of shares. So nothing crazy on the share side. But if roughly a $15,000 investment can pay, let's say 30%, that's pretty good. Make a couple $1,000 bucks. So make about $4,500. That's not bad if we get up to these range highs. So I'll set a chart alarm up here around the 180 handle and maybe consider taking some profit up there. Currency strength wise today, by the way, I do have a hard stop at 11 o'clock. I could jump into another session. As Nick mentioned, we have some risk off flows today. So dollar, was on top. It's fading slightly. The Japanese yen and the Swiss were immediately the risk off flows at 8 p.m. When the futures market ripped, and you saw some risk off trading. So you got Swiss and yen risk off. You've got the New Zealand and Aussie, which were considered risk on. You can see that's the dynamic here. Risk on currencies are the weakest. Risk off currency pairs are the strongest. The yen and the Swiss have faded a little bit. The dollars come out kind of ahead. The CAD, which is proxy for oil, ends up being on the day a little bit stronger. Now we have compressed volatility a little bit today after having that big explosive move around 8 p.m. last night. So I mean, is something going to go expanding through the rest of the day? I don't know. Probably not. I think that was kind of a big explosion of volatility. We'll see if things just kind of contain. Okay, Bitcoin. I mentioned this one earlier. I don't mind getting pullbacks on Bitcoin. I personally, I mean, I guess I don't mind it if we pulled back to like 75, although it wouldn't be fun. It wouldn't be fun to see a big pullback like that. But I think we could backfill like 100K. If we came back to 98,000 or so. I mean, this low is around 100K. We come back to like 98,000. That's a pretty good support level. We got a lot of chopping here around 97 to 98,000. There's also a nice inefficiency around this 92 to 87. So between like 98, 92, and 87, I like all those spots for maybe some add-ins, which is what I'm doing with IBIT. IBIT, I'm just buying more levels. So if it comes down to like $56, I'm buying a little bit. Comes down to $52 and change, I'm buying a little bit. Comes back down to $44, I'm buying a little bit. So I'm just going to level in. Okay, nothing too crazy. Let's see what the world is doing non-US. So let's go world. A lot of red today. China's down. Europe is down. We got some UK that are doing okay. Again, oil. I mean, BP, that's oil. Shell oil. BTI, that's British American Tobacco. I have actually some trades in that along with MO. This is more of like a dividend play. Like MO's been doing well. This is one of my better performing dividend stocks. Bought this thing at $40. Have nice price appreciation plus a 7% dividend. BTI is kind of the equivalent of that with a non-US holding. So bought this thing around $31. It's up to $49. It's obviously a lot of gains for a boring stock, but it also has a nice 6% yield. So just letting price go plus giving the dividend kicker, that's pretty good. What else? We did Bitcoin, oil, gold, silver, dollar, currencies, indexes. We are still just kind of hovering around the gap lower today. Price is pretty centered. So I mean, we open up around 6,000 and we're trading around 59.91. So the market's not bleeding too bad. We're still down less than 1% after roughly it was almost a 1% gap. So from this high to the open, market was down about 0.75%. It's just pushed a little bit lower, but not too bad. Let me check a couple of trend lines here. Let's go bigger time frame. So that's the trend line that I'm watching. Is it noisy at the trend line? Are we actually rolling over this trend line? We'll find out based on today and tomorrow, or today and next week. If we go to the NDX, couple of trend lines here on the tech play. Are we actually breaking these trend lines? So connected the low, the low, the low, the low. If we're breaking that trend line, do we break the bottom from April 7th to this pullback in this is April 21st, I think. That was when we had that pretty nice pivot off of Monday. Yeah, so we had the 7th and the 21st. You connect those bottoms. If we're on the right-hand side of that, I think this U.S.-China trade gap gets filled. This is just, market tried. There's the high. There's the low. Market tried. If the market rolls over, it's fine. It's just going to be maybe some noise in here, right? I mean, if we know how to make money in a noisy market, that's good. I don't have to be bearish right now. I just have to be patient. If the market's going to fall, great. If it falls enough, I'll make money on some hedges. If the market falls, I'll probably start selling some more premium. Okay, but my premium is going to be, trying to get a big margin for error. I mean, if I'm selling premium, I want my positions to be like way down here. 17,000 down to like 17 or 16.5 on NDX. If I'm going, SPY, that low was like 482. So I would be selling probably 111s, maybe some naked puts around like the 480 handle, and just collect a little bit of premium if we have a decent jump up in volatility, which I mentioned that this week. I mean, I don't think anybody would be super surprised to see the VIX spike back up into the 20s. What did we do today? We spiked into the 20s. VIX was up to 22 today. And that's nothing. Like, could we go to 24, 25 and a little bit more risk off trading? Sure. Are we getting back into 30 plus VIX? Probably. I mean, maybe not unless things really, really escalate. But just having a little bit of ventilation where it's like, look, this was one of the largest volatility crushes that we've ever seen in 30 years. Okay, so what happens? Well, there's clearly some time for volatility to like poke its head again. If I wanted to look at SPX500, I mean, that's not really enough to get me excited. If we had like a bigger spike or a decent decline in SPXY, then I would probably start buying in and look for a reversion on volatility. But we don't have it yet. Dollar index. Look, if you've been following me the last couple of months, what have we been talking about in the dollar? I mean, when we had this first break of these lows, I said, look, this is a good spot to be looking to sell the dollar. It worked out. If we broke the trend line, you sold the backside of the trend line retest. It's a good spot to sell the dollar. I said, if you're getting into these lows, take some profit, trail the stop losses. Don't sell at the bottom. I wouldn't be surprised if this low is going to hold. Okay. And the better trade, in my opinion, with the least amount of risk would be to buy the dollar. If you stop out, okay, fine. I don't want to call the bottom here, right? But I do think that a bottom is much nearer than people think. We had that big spike in the euro. I think that was a stop loss play, right? Why? Because everyone was shorting the euro with stop losses above this high. So what price do? Come up and poke it. I wouldn't be surprised if the dollar, turns and starts to work its way back down. So euro dollar, and I said this week, if you're watching for confirmation, wait. Let's see if price forms a topping pattern. Maybe makes its way back down to the same lows again. Maybe pulls back a little deeper. That's fine. But this is the trade I had on the euro dollar. I was long and I took profit just before the high. Okay, that's what I want to do. I don't think the euro dollar is going higher. Not right now. I think the dollar index is going to turn and probably head back up to a range trade around that 101 to 102 handle right there. So we pull back to 101, 102. Yeah, maybe. If we do, it's not a surprise. So just be like a bear trap at the lows using this range. I think that, medium to long term, the dollar gets weaker. I really do. I think the dollar is likely going to get weaker. I think gold right now is being given a much better pedestal to be like a better asset to hold and trade. I think that Bitcoin is becoming that better asset to hold and trade versus fiat, versus the dollar. 2025 has probably accelerated this whole idea of dollar weakness and debasing the currency pair, challenging the fiat system. 2025 has accelerated this entire narrative, which I don't think is a bad thing. I just think as a trader, we can keep it really, really simple. It can be gold, silver, SPY, Qs, Bitcoin. That's 5 things. If that's all I trade in my portfolio, that should be pretty easy to manage. So I turn up, I turn down, I keep my percentages pretty consistent. And I think that's a good way to stay somewhat diversified, but also benefit from, gold and Bitcoin. I think could be great, like asymmetrical assets with this like anti-fiat play. I also think that in the broader market, S&P and NASDAQ are always resilient, and they're trying to find ways to have even the best companies, even if it's only 10 companies, it can still carry the entire market higher. So anyway, it doesn't have to be hard. But with those core positions, I want to sell options. I want to lower my cost basis. I want to be able to hedge and protect the downside. Every 3 to 6 months, every 6 to 12 months. I want to have some protection out there. That's the one thing I think every trader needs to understand is if you can properly manage risk, money is easy to make. If you can't properly manage risk, you'll struggle. I mean, think about that. Like if you can bulletproof your floor, yes, it's going to be dented. It's like you're going to have some losses, okay? But if you can bulletproof your floor where you just start winning and trading with confidence and not letting risk be a thing that's like, please, I don't want to lose. Look, you got to just trade responsibly. This is why I'm such a big proponent of risk-defined trades. I don't want months and months and months of good trading to be ruined by one silly event. It happens way too often. I talked to a trader this week that like crushed it last year. Like was I don't know percentage wise, but talking like literally 6 figures of profit, and turned into this year gave it all back because of February, March's pullback, because of February, March, April, gave it all back and then some. And so even with this melt up, he's kind of back to break even. That can be really frustrating for any trader to have like good stretches of months and months and months of progress and months of profits, and then have the market take it all away because you don't manage risk very well. So when you manage risk and you bulletproof that floor, it's easy to build off of a nice solid foundation. So that's really my job. My job is manage risk better than most, and that helps me make money. And making money on the upside is pretty easy. So anyway, we'll talk more about that next week in the mid-year review. Any other charts, any things you want to take a look at? I'm gonna bounce out here in about 13 minutes, so we can take a peek top and bottom. Safe haven demand amid rising. What's funny is safe haven demand, but the U.S. bond market isn't catching a bid at all. TLT is actually down about 1% today. Equities are down, and so are bonds. So I just still think the U.S. bond market is in a really interesting spot. It's kind of a pickle. I don't know it just seems like nobody wants it. Like if anybody wants U.S. bonds, it's like give us a 1-year bond, give us a 3-month bond, give us a 2-year bond. Like nobody wants duration anymore. It's way too sensitive when you're forced to have 10, 20-year duration holding to maturity. And that's what happened in 2023. If you followed that Silicon Bank crisis and First Republic and what was the other one? I think it was mostly SVB was the big one, Silicon Valley. But that regional bank crisis was mainly because of 10 and 20-year bond holdings that were trading for like 70 cents on the dollar, 80 cents on the dollar. And in order to have that liquidity, they had to dump those bond prices at a huge loss, and they were declared insolvent. But the Fed obviously backstopped it and jumped right in and added liquidity to it. But that's the silly stuff that happens with some of those mandates is, you're forced to have all this duration on the books. And all of a sudden, when people come wanting money back and you don't have the liquidity for it, then that's how a regional bank was fundamentally very strong, but was actually insolvent because it didn't have the ability to hold things until 10, 20-year maturity. Okay, dollar Swiss. Yeah, I'll take a look. Dollar Swiss. Dollar Swiss kind of similar to the dollar index, right? Dollar Swiss in a lot of ways is inverse of euro dollar. So if the euro dollar is, there's your high, there's your pullback, there's your high getting tested. If this thing turns south, I wouldn't be terribly surprised to see the dollar Swiss turn back north. Okay, maybe. Obviously the bigger picture here is also this dollar Swiss has to break this trend line. If the dollar Swiss holds this low, breaks this trend line, I think we head back up into this pocket. But until this trend line breaks, this is guessing where the bottom is. And I don't necessarily love that outside of maybe a round number here, 8,000, and just see if it holds. Because if we hit, like right here, we have equal lows. If we hit a little bit lower and we have divergence where price goes lower, but momentum and relative strength show divergence, then that still potentially offers up a low that we can trade from. So I'm still holding. Call me crazy, but I'm still holding long dollar Swiss. I took a lot of profit. Excuse me. I took a lot of profit there. Cleared up about 20 some positions of profit at 9,200. I started to scale back in around this fall. So this fall, I started to get back in. I've ridden this thing out a little bit longer. I'm trying to get back to about 8,750 to 8,800. That's my profit target. And I'm not done. I'm just going to stay really small and scale into this thing. But if I can see a bottoming pattern here, then I will, trade accordingly, position accordingly, and see if I can get a break on the right-hand side of the trend line. To help, dollar Swiss. Dollar yen, still choppy. The big floor is 140. The big range is maybe the 149, 150. Dollar CAD still sliding lower. I'm interested to see if the dollar CAD comes to like a 134, 133, 132 zone. We have lows here around 132, 131 and change. I'm going to buy some dollar CAD down here. So if we go to these levels, I'm going to buy some dollar CAD. So I'd like to see maybe some pivots missed and some inefficiencies, some oversold conditions. But if we get back to these levels, yeah, I think there's a good spot to scoop up some dollar CAD. New Zealand dollar, we'll see. I like a pullback towards like 58.50 or so. New Zealand yen, no trade. New Zealand Swiss, I'm still kind of hanging on to. This is just getting beat up from a risk off perspective. New Zealand CAD pulling back. I might get that 50618 fill that I want. I'm looking for a swing trade on New Zealand CAD and Aussie CAD. Pound dollar, no trade unless this thing rolls over on the trend line. Pound New Zealand, nothing. Pound yen, nothing. Pound Swiss, ooh, this actually had a pretty nice pullback. If pound Swiss, this isn't bad. Small trade here, and then maybe another trade at the lows. We're right at the 200 moving average, but I'm looking for this pocket to get filled. I'm not going to trade it yet. I'm just going to wait in case this risk-off trading gets a little bit worse. Pound CAD starting to roll over a little bit. Pound Aussie, Euro dollar we talked about. Euro New Zealand risk off trading, so it's going up. Euro yen still squeaking out a little bit higher highs. Euro pounds. This one's been way more volatile the last couple months. Not in a bad way, just more volatile, which is interesting. Euro Swiss, I'm still holding long. This one, hopefully we head back up towards like 96.50. Euro CAD. I like the idea of selling like a 5,800 and a 6,000 high and just kind of staying with this trade. This could be a head and shoulders. It's kind of an ugly one, but this could be a head and shoulders setup. Where if we break this neckline, then there's room to measure. So symmetry gets us back into this inefficiency around like 51 or 5,200. Okay, Euro Aussie, little risk off trading. Swiss yen. Swiss yen is favoring the Swiss over the yen. Maybe going back to highs again at 180. I'm not going to take this trade. I don't want to do anything with negative swap. But if it comes back to 180, does this actually turn? Trendline break, does it turn and go the other way? This is just a big range trade, maybe. I mean, that could be a good looking setup. I just don't know if I'm going to trust that enough, especially with negative swap. Nothing on CAD yet other than maybe believing that we're just going to stay making higher lows and higher highs. CAD Swiss, hopefully we get a nice little rip to the upside. I'm holding long on this one. Aussie dollar, want to see some pullbacks. Aussie New Zealand, I'm still buying in. Aussie yen, right side of the trend line, but just be careful on yen crosses as always. Aussie Swiss, waiting, like maybe this is my pullback, right? Maybe this is my low to high. This is just a pullback area. So once it's ready to kind of hold the lows and then we work our way back up, we have lots of past support in here. We have a nice little moving average cluster. Maybe that's my symmetry. So low to high, higher low to higher high. I'd like to see a 5-wave move if possible, but not there yet. I'll get to oil in a second. There is Aussie CAD. I'm looking for this like 50618 swing trade on Aussie CAD. Let's go to oil. Just a monster spike in oil. I mean, if you do anything with oil right now, it's a reaction. I mean, the smart play in oil would have been you're buying off the double bottom with a tight stop loss at 50 bucks roughly, and it's gone up 40%. I mean, right now, what do you do on oil? Nothing. Like, to me, this is still not necessarily a buy trade. Like, the buy trade was here with low risk and like trade it back to 65. And you got the squeeze to go above that. I don't want to chase this thing. I mean, it's already at 40%. What are you going to do? Buy oil now? I don't know. I don't think so. To me, this could be a fake out, fake out, fake out. This whole thing could also be a fake out. This could be like what was, the most hated trade, which is like long oil was a hated trade. So everyone's bearish, bearish, bearish. Sentiment is super bearish on oil. What happens? We squeeze. So now all of a sudden people are pivoting. They're dumping positions. Everyone that was short oil is getting busted up. I just think it's a noise. It's a bunch of noise. So I want to see how oil settles before I would consider taking a trader position. Make sense? So to me, this doesn't really prove anything, because if today's candle forms like this and it's like half body, half wick, going into next week's trading, are we red and going back down again? Or is it more green, more? I mean, I have no idea. But to me, this is some really aggressive price action that is now making some. It's gonna flip orders. Everyone that's been bearish is now. Are they going to chase? Everyone that's bearish is now getting stopped out, so they're no longer short. That just propels a short squeeze. Okay. So I'd say let's just wait. Let's wait and see how oil settles and make an assessment. Not a 1-day reaction. Okay. Dollar, we did just watch the lows. Be careful. I think this thing will hold the lows. Okay. Again, I'm not calling the bottom on the dollar. I'm just saying that as a technical trader that sees oversold conditions with divergence at these same lows, I'm way less interested in trading the dollar short and more interested in maybe seeing a bit of a correction on the dollar to the upside. Okay. Again, VIX on the day, had a big jump to the upside into the 20s. It's faded a little bit, but if you go to like a 10-minute chart here on VIX, pretty noisy for like opening bell. I mean, we opened up here. Here's your 9:30 open. VIX was going higher, so price was dropping a little bit, and now we're kind of fading. So I don't know. I mean, just get a read on the VIX. Maybe it's just noisy on the VIX and price stays noisy all day. This for the day, it's like maybe it's just a big island where price action gaps but doesn't really go anywhere. Just trying to zoom in. So we have close yesterday, gap lower, price is just hanging out here. We are on the right-hand side of the trend line. So, I mean, just looking past today's price action, let's say that today it sits here with a gap where we're not at the high and we didn't really do any crazy damage to the downside. We're just down. Like the markets are down today, but this will be an important candle for next week. Because if we break and go lower, there's nothing stopping it. We break and go higher. I mean, we come back and fill this gap. We come back and maybe get to the highs around 60 again. But if we're in the middle, like this is why, maybe some noise trading on Monday. And if we break and go lower on Tuesday or Wednesday or Thursday, Friday, like I'm hoping that Monday is just not a big directional day. If it is a directional day, then we just have to be prepared for it, right? So anyway, that's just what I'm reading from this price action here. Is like we've broken a nice clean trend line. We're holding right here in this kind of no man's land. If the bears take out this low and start eating into some gaps here in 594, take out some lows, that big China US trade gap is all the way down here to like 580. Could also be all the way down here towards 565. There's a lot of potential for this thing just to roll over a little bit. Is it all going to be driven by risk off trading? Is it all Middle East tensions? Maybe. I mean, it shouldn't be. It's like the markets never really had that adverse of a reaction from a little conflict. Now, if it's a war, then yeah, things can get a little bit nastier. But if it's just like, okay, what are we going to do? Talk to Israel. Let's try to work out something. We don't want to have a major conflict in Iran. I mean, it's like that's above our pay grade, So, all right. I do have to run. I did oil, gold, silver. We did Bitcoin, did a bunch of stocks, looking at the indexes, watching price for next week. Write this number down on the SPX, 5905. End of the month, I think price is going to be below that. It's just basically a quarterly ceiling price that we've ran above it. So I think we're possibly going to come back and get below it for a out of the money finish. But I just think there's a bit more of a risk off tone, and whether it's just like the start or preview of things to come, we'll see. Or maybe this rolls over and officially this trend line is breaking and the bears are going to take over, the bulls kind of fold. Time will tell. We'll find out. Like how today closes. Let's find out. We'll find out on Monday next week. Next week is the Fed on Wednesday. They're unlikely going to change. It's like a 97% chance that it's still a pause. Powell is speaking. I'm curious what the Q&A is like. Do they try to drum up some drama between him and Trump again? That with the survey or rumor has it that your replacement's already in. Blah blah. I mean, nobody knows. So I hope Powell just takes the high road, does his thing. Inflation's probably the biggest focus right now for the Fed. Not getting and cutting rates too early, although some argue that they're already behind right now. But I don't know. I mean, inflation obviously printed a little bit higher. We went from headline 2.3 to headline 2.4. Oil's up, 40%. Does that mean more inflation coming in energy? Possibly. The biggest way we feel inflation right now for the US is pay at the pump and cost of goods. If services are more expensive, if goods are more expensive, if pay at the pump is more expensive, that's what we notice. That's not core, because core excludes food and energy, right? So anyway, and super core excludes housing, which is also high. But headline is still sticky above that 2%. So, all right, I got to bounce, and we'll come back and do it again next week. Lots of exciting stuff happen next week with FOMC, trading battle, mid-year review, and sessions per usual. So thanks a lot. Have a good weekend, and we'll see you soon. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.